Hello viewers, welcome to my channel. I'm Hasham. Last video I have explained you about the concept of working capital, meaning, definition, gross working capital, net working capital, components of working capital, current assets, current liabilities, and operating cycle. These are the concepts I have explained in the last video, and this is the second and last video on working capital management. In examination, a theory question may be asked regarding this working capital. What is the importance? What are the determinants of working capital? What is permanent working capital? What is temporary working capital? What is the need of working capital? Different type of questions may be asked from this working capital management. So if you want the perfect knowledge, watch the video till the end. Don't skip in between. And if you have not watched the first video, I suggest you go to the playlist of my channel, select the subject Financial Management for BBA. Select the video of Working Capital Management Theory 1. Be perfect about the meaning, concept, then you can proceed. Remember, you should not focus only on problems. Theory is the foundation of any subject. Before mechanically doing the problem, you must be conceptually clear. What is the meaning of those concepts? Then only you will get the perfect 100% knowledge. Otherwise, simply if you focus only on problems, you'll get the degree, but you don't have the confidence, you don't have the knowledge. So shortcut method don't apply. That is my suggestion. Now, before starting the explanation of the remaining part of the chapter Working Capital Management, take the screenshot of the points which I have written, then I'll explain every point. So working capital means the investment in current assets. So every business has to invest some amount in current assets like inventories, account receivable, cash and cash equivalent. So some amount is already available in the form of current liabilities. So gross working capital means the total investment in current assets, and net working capital, current assets minus current liabilities. So it will impact the management of working capital, which will have an impact on the profitability as well as liquidity. So in order to make a balance of this profitability and liquidity, the business has to manage the working capital. Now, in this video, first of all, classification of working capital. Broadly, we can classify the working capital into permanent working capital and temporary working capital. Now, permanent working capital, it is also known as fixed working capital. It is the minimum amount invested in current assets. That means this working capital will always be there with the business, with the company. It will not fluctuate. The minimum amount of investment in current asset is called permanent working capital. It is a minimum amount of capital in the form of cash and other current assets to ensure effective utilization of the facilities. Facilities means all the fixed assets. Whatever fixed resources we have, to effectively utilize those resources, we need minimum amount of working capital. And usually every firm has to maintain certain minimum level of raw material, work in progress, stock of finished goods, cash and cash equivalent permanently and constitute permanent working capital. Some minimum amount of investment should be made in inventory. Inventory consists of raw material, work in progress, finished goods. Apart from that, some credit sales will also be made. When credit sales are made, account receivables are there, cash and cash equivalent. This minimum amount of investment in the current assets are called permanent working capital. This is always will be there. And the requirement of fixed working capital depends on the size and nature of the business. We have different category of business like manufacturing business, trading business, service providing business. Accordingly, the permanent amount of working capital depends on the size of the business. If the business is large, more working capital. If the business is small, less working capital. Nature of business, manufacturing, trading, or what? So all these factors will affect the permanent working capital. We cannot give a direct generalization rule that this much should be the working capital for every business. No, a doctor cannot prescribe the same medicine for every patient. He has to diagnose, he has to find out what is the nature of disease he will have. Accordingly, he will prescribe the medicines. Same. This general amount we cannot say that every business must have 5 lakh rupees in working capital. No, we cannot, because the nature of business will differ and size of the business will also differ. Larger the business, greater working capital. Small business will require less working capital. A big business will require more working capital. So this is all about permanent working capital. After watching this video, definitely you will get the confidence. In examination, you can write confidently the meaning of the term permanent working capital. So I suggest my viewers always to keep running notes while watching the video. Only watching the video, listening the lecture will not be sufficient. You should work on writing. You should keep it a record, permanent record, so that before examination, just if you have a glance over the points, you can be able to write. Now, temporary working capital. Any working capital which is over and above permanent working capital is called temporary working capital. Any working capital over and above permanent is called. This temporary working capital will fluctuate. During a particular, the temporary working capital will be more, and during another period, the working capital will decrease. It is variable working capital, right? Now, such working capital is required to meet the changes in business operations and current market conditions. See, the market conditions, the current circumstances will not be same always. The conditions will change. Market is very dynamic. Sometimes the demand will be more, sometimes demand will be less. Sometimes business cycles, boom period, depression period. Due to these market conditions, the requirement of working capital will also fluctuate depending on these circumstances. Now, for example, during festive season, more working capital is required owing to increase in demand for the product. Festivals. Normally people will enjoy, people will celebrate the festivals. During is the demand for the goods and services will increase. So during festive season, the demand of products will increase. For example, during Christmas period, the Christians will celebrate the Christmas, the demand for products will increase. Similarly, during Diwali, the demand will increase. During Ramadan, the demand will increase. So during festive season, the demand for goods and services may increase. More working capital is required, right? So thirdly, temporary working capital is the amount required to meet the needs of business owing to fluctuation in demand for the product due to seasonal product. Many business will produce seasonal products like ice cream. The demand for cool drinks and ice cream will be more during summer season. So when summer comes, the production of ice cream, the production of cold drinks, soft drinks will increase. The demand will be more because it is seasonal. More working capital is required. The company which produces ice cream, the working capital requirement will increase during summer. Similarly, umbrellas, raincoats, the demand will increase during rainy season. The sweaters, these sweaters demand will increase during winter season. So there are many products which are seasonal. So during season, the demand will be more. When the demand is more, the working capital requirement will also be more. For example, the soft drink. Throughout the year, 12 months of the year, the production of soft drinks will continue. But as soon as the summer comes, the demand will increase, so production will also increase. So working capital will also increase. So for the whole year, let us say a company which produces soft drinks. The permanent working capital in the company is 5 lakh. So 5 lakh rupees is the money invested in current assets. This is a permanent working capital. But as soon as summer comes, the production increases, the demand increases, working capital need increase to 8 lakh. So permanent working capital 5 lakh. Now the working capital need has increased to 8 lakh during summer season. Then what will happen? The excess 3 lakh rupees which is required is called temporary working capital. Now, it is mainly essential to maintain businesses having seasonal fluctuation demand such as manufacture of soft drinks, umbrellas, raincoats. Example I have given. So, the companies which produce seasonal product, they may have temporary working capital during seasons. Then throughout the year, permanent working capital will be there. So in examination, you may be asked a theory question regarding explain about permanent and temporary working capital. So this expression is more than enough. Need for working capital. Why working capital is required? Why the business has to invest in current assets? Why? All the money cannot be invested in fixed assets only, right? Why? What is the need? Now, working capital is the amount required to meet operating cost, running cost, operation cost. Example, when the business is running in a rented premises, rent has to be paid, workers are working, wages has to be paid, material has to be purchased, payment has to be made to the supplier, electricity bill has to be paid, telephone bill has to be paid. All these are the operating activities. So to conduct the operating activities, some funds are required. So that is the need. That means working capital is needed to meet the current obligations of the business in running the business. Secondly, it represents short-term financial requirement. The business will require funds for two purposes, for long-term and short-term. The long-term funds are required for purchasing fixed assets like machinery, building, furniture, equipment, facilities. Long-term funds are required. And short-term funds are required for meeting the day-to-day expenditure, operational activities. Next, the working capital is usually required in the following cases. Why? What is the need of working capital? First one is to purchase raw material and other inventories. Every business has to maintain inventory of raw material. So in order to purchase the inventory, we need the funds. Without funds, we cannot be able to purchase the inventory, raw material. That is the need of working capital. Secondly, to pay wages and salaries. Without workers, employees, no business can run. When employees are employed, then salaries has to be paid, wages has to be paid. For paying salaries and wages, we need working capital. Thirdly, to make payment of dividend to shareholders. The shareholders are the owners of the business. They have invested in the company by purchasing the shares. When they purchase the shares, they expect a dividend from the company. So if the company is having working capital, sufficient funds, they can be able to pay the dividend to shareholders. That is the need of working capital. Next one is to pay recurring expenses and overheads like electricity bill, telephone bill, and other bills, office expenses, etc. So all these are the routine expenses which are to be incurred, overheads, indirect expenses. So day to day expenses पे करने के लिए कुछ फंड रहना जरूरी है, तो वो फंड को कहते हैं working capital. That is the need. Next one, to provide credit terms to customers. Nowadays, a lot of competition is there in the business. If you depend only on cash transactions, your business will be restricted. Because the whole economy has become a credit economy. That means we have to sell the goods right now, but we'll get the money later after a period of time. That means we have to give credit period to the customers. Suppose if we manufacture goods by investing 80,000 rupees, the cost of production is 80,000 and we sold it for 1 lakh. But customers will take time. The customer will take 3 months time. So till 3 months, our 80,000 rupees are blocked. We have invested, we have incurred 80,000 in producing the goods, but we are not getting money right now. We'll get after 3 months. So till 3 months, our 80,000 rupees is blocked. So need of working capital is to make the credit transactions. So these are few cases where it shows what is the need of maintaining working capital. So now I am going to explain you about importance of adequate working capital. Adequate means sufficient. Sufficient in the sense the company can be able to run smoothly. The company can be able to balance the profitability and liquidity. Then the business can be successfully continued. This will happen only when the business is having adequate working capital. So adequate working capital is a minimum amount of working capital required to meet operating activities of a concern under normal circumstances. So successfully, smoothly, the business has to run. So for smooth running of the business, we need sufficient or adequate working capital. Minimum amount of working capital which we require for smooth conduct of the activities of the business. Next, excess investment in current asset में lower profitability. अगर ज्यादा पैसा करंट असेट में इन्वेस्ट कर देंगे तो आपकी प्रॉफिटेबिलिटी डाउन हो जाएगी. सिंपल एग्जांपल आई गिव यू. इन योर बिजनेस द इन्वेंटरी लेवल इज 5 lakh, but instead of keeping 5 lakh you are keeping inventory of 10 lakh rupees. So excess inventory you are keeping, money will be unnecessarily blocked. There is a saying, idle money will not generate any income, idle money will incur cost. अगर आपको पैसे की जरूरत नहीं है फिर भी आप बैंक से लोन लेकर अपने लॉकर में रख दिए, तो इज इट अ प्रूडेंट थिंग यू हैव डन? नो, बिकॉज व्हेन यू डोंट रिक्वायर फंड्स, व्हाई यू हैव टेकन द लोन? बिकॉज एज सून एज यू टेक द लोन, द इंटरेस्ट चार्जेस विल स्टार्ट. Whether you have utilized or not, you have to pay interest charges, so you are incurring cost. So why to unnecessarily keep the funds? Here also, if we keep excess working capital, it will reduce the profitability. Inadequate working capital may result in lower liquidity. Two effects. High working capital raha to be problem hai, low working capital raha to be problem. If you keep more working capital, your profitability will decrease. If you keep very less working capital, your liquidity will get affected. You cannot be able to pay the obligations on time. Your reputation of the business will be at stake. So neither no working capital nor high working capital. Both are evils. Therefore, optimum investment of working capital was a trade-off between liquidity and profitability. So what is the adequate working capital? Optimum working capital, a trade-off between profitability and liquidity. That means that amount of working capital should not affect the profitability, and also it should maintain the liquidity. Therefore, the following are the benefits of maintaining adequate liquidity. If you keep sufficient, adequate liquidity, जितनी पैसे की जरूरत है उतना ही पैसा इन्वेस्टमेंट करके रखे करंट एसेट्स में, वर्किंग कैपिटल मेंटेन करे, तो उसका इफेक्ट क्या होगा? देन लिक्विडिटी एंड शॉर्ट टर्म solvency. If you keep adequate working capital, your liquidity position is good. You can be able to pay all current obligations on time. On time, you can be able to pay to the suppliers. On time, you can pay the wages and salaries to the workers. On time, you can pay electricity bill, all utility bills. That means your liquidity position is good. Your short-term solvency position is good. So, if you maintain adequate working capital, your short-term liquidity position will be excellent. Secondly, goodwill. When you pay continuous amounts to the supplier, there is no delay in the payment to the supplier of material, supplier of goods. When there is no delay in the payment of wages and salaries, no delay in the payment of utilities, then what will happen? The goodwill of the business will increase. Reputation of the business will increase. So the business can go in the long run if you have a goodwill. And we can earn goodwill, we can generate goodwill by managing the working capital, adequate working capital. Next one is cash discount. If we have adequate working capital, we can avail cash discount. The supplier will say, if you pay immediately, we'll give you 10% cash discount. So we can avail cash discount only when we are having working capital. If we don't have working capital, we cannot avail the cash discount. We are losing the opportunities. That's why working capital is needed. Thirdly, easy loans. Before giving the loans, the banks will see what is the liquidity position of the business. Is the business in a position to repay the loan along with interest or not? If the company is having a good liquidity position, bankers will come forward to give the loan. Easy loans the business can get. Next is regular supply of raw material. When we pay promptly to the suppliers' bills, the suppliers are ever ready to supply the goods to the business. That means we get a good reputation. The suppliers are always coming forward to have connections with our business, to sell the goods to our business. Next, increase productivity. When we are having sufficient material, when we are having satisfied, motivated employees, then labor productivity will increase, and productivity of activities will increase. That means if we maintain adequate working capital, the workers are very happy to work, more motivated. So productivity will increase, production will increase. Next, exploitation of favorable market conditions. The market is very dynamic. There are many opportunities coming up in the market. If you are having sufficient working capital, you can avail the market conditions, market opportunities. So these are the benefits if you keep adequate working capital. Very important question. Next is determinants of working capital. The working capital, we cannot make a generalization that every business must have this much of working capital. No. The working capital will differ from one business to another business. So how to determine what is the adequate working capital for our business? Some determinants are there. By seeing that determinant, we can decide how much working capital we need. The working capital depends on various. Following are some of the factors. Nature and business of industry. Nature of business and industry. See, all the businesses are not alike. Some are manufacturing business, some are trading business, some are service providing business. So the working capital depends on the nature of the business. Example, in a manufacturing organization. So more time is required to use the raw material, convert into finished goods, then after finished goods it has to be sold. Lot of time period is required. So more working capital. Whereas a trader, he is simply buying the goods and selling the goods without manufacturing. He requires less working capital. Similarly, service providing, they don't have any inventories. Then in that case, what will happen? The working capital will be low. So it depends on the nature of the business. The working capital depends on the nature of the business, size of the business. Normally, larger business require more working capital. Small business will have less working capital. So it depends on the size. Next one is length of manufacturing cycle. That means what is the duration of manufacturing? If the manufacturing process is very short, less working capital. If the manufacturing process is taking a long time, more working capital is required. Next is business cycles. That means every business will pass through different phases like boom period, depression period, recession period. So during this period, the working capital will also get affected. So it depends on the business cycle. Next, production strategy. How you are producing the goods. What is the strategy adopted by the business for production of goods? On that basis also working capital is required. If the business wants to produce in bulk quantity, more working capital. If the business is manufacturing in smaller quantities, less working capital. Next is credit policy. Different credit policy the business may adopt. Liberal credit policy or strict credit policy. If the business follow liberal credit policy, that means giving more time period to the customers, more working capital. My business is giving 4 months to my customers for making the payment, and your business offers only 1 month. That means every month you are going to get the money from the customers. I am going to get the money in 4 months. So credit policy, my credit policy is liberal policy, and your policy is strict policy. So if you follow strict policy, less working capital. My business is following liberal credit policy, more working capital. Next one is inflation. During inflationary period, the prices of goods and services will rise. In that case, more working capital is required. Inventory turnover. What is the inventory turnover ratio? What is the ratio at which inventory is converted into sales? If the inventory turnover ratio is high, that means frequently we are getting the money from sales. In that case, less working capital is required. But if inventory turnover ratio is more, that means we have to wait to get the money from the customers. More working capital is required. Lastly, dividend policy. How much dividend the company is paying? If the company is paying more dividend, more working capital is required. So these are the determinants of working capital. Very important question in examination. Now, working capital management. Managing the working capital is very important task of the finance manager. Otherwise, the profitability and liquidity both will get affected due to bad working capital management. So, working capital management is the manufacture of current assets and current liability to optimize operational activities. Managing the current assets and current liability is called working capital management, so that the operations should go smoothly. Then it includes management of total working capital and as well as level of individual current assets to ensure maintenance of adequate working capital. So, management of working capital requires individual management of current assets, managing cash, managing account receivable, managing inventory. So, individually we are controlling and managing the working capital. Then working capital policies have significant bearing on profitability and liquidity to meet its day-to-day operational requirement. It is necessary to make a balance between profitability and liquidity. Profitability should not get affected and liquidity position should be maintained. For that purpose, we require working capital management. The last topic of this chapter is objectives of working capital management. What are the objectives? The working capital management ensures that a company can meet its short-term financial obligation, maintain smooth production and enhance shareholders' value. Three things you have to remember. If you manage the working capital, what will happen? Short-term, the company can be able to meet the short-term obligations on time. That means all the bills can be paid, supplier bills can be paid, everything can be conducted smoothly. Similarly, maintain smooth operations. The productivity will not get affected and shareholders' value will increase. That is very important. That is the reason why working capital has to be managed. The main goals of managing working capital is liquidity management. Liquidity means ability of the business to pay the current obligations on time. If your business liquidity is good, you can be able to pay your bills on time. So that is the main objective, that our liquidity position should be good. Optimum utilization of resources. The fixed facilities we can utilize only when we have working capital. Example, if we don't have working capital, how we can be able to maintain the machinery? How we can be able to maintain the other fixed assets? It will be difficult. That's why to utilize the other fixed assets, we must have sufficient working capital. Risk management. The business is risky. If we do not manage the working capital, there is a chance of liquidity problem. The company cannot be able to pay on time. Then maintain operational efficiency. The operational efficiency we can increase. That means by motivating the workers, by conducting the repairs, everything we are maintaining up to date. The operational efficiency will increase. Next, maximize profitability. That means we should not keep excess working capital. If we keep excess working capital, the profitability will come down. So we should maintain only that much working capital which is needed, which is adequate. So in that way, our profitability will increase. Otherwise, the profitability will come down. Next is ensuring financial flexibility. Once the working capital management policies have been framed, it should not be fixed. It should be flexible. Time to time, as per the requirement, the working capital policies should change. Next, improving cash flow. Cash is the lubricating element for the operations of the business. If we do not have cash inflows, then what will happen? It will be difficult to pay the liabilities. The effective cash flows we can maintain by having working capital management. Lastly, enhancing shareholders' value. When the business is managing working capital, the profitability, liquidity position will be good.